Ladies and gentlemen, we welcome you all to the business update call of Venus Pipes and Tubes Limited, hosted by Ambit Capital. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhruv Jain from Ambit Capital. Thank you, and over to you, sir.
Thank you. Good morning, everyone. On behalf of Ambit Capital, I welcome you all to the business update conference call of Venus Pipes and Tubes Limited. We are pleased to have with us the management team represented by Mr. Arun Kothari, Managing Director, Mr. Dhruv Patel, Whole-Time Director, and Mr. Concall, CFO of the company. We will have the opening remarks from the management followed by question and answer session. Before we begin, please note that this call is held to discuss the business update by the company released last night, and we would request all the participants to limit your questions around the same. Thank you, and over to you, Arun sir.
Good morning and warm welcome to everyone on the business update call for Venus Pipes and Tubes Limited. I have been joined by Mr. Dhruv Patel, our Whole-Time Director, Mr. Concall, CFO, and SGA, our Investor Relations Advisor. We have uploaded our business updates, investor presentation on stock exchanges and company's website, and I hope you had an opportunity to go through the same. Our journey over the past few years has been exceptional. We came with an IPO in May 2022 and raised funds of rupees 165 crore for expanding our capacity by 3x and backward integration. Since the commencement of this capex, we have seen a strong growth in our financials with a significant margin expansion on the back of robust execution and strong capacity utilization. Now, with great pride, I am here to say that our company has announced its next phase of growth with a capex of rupees 175 crores towards value-added product lines, fitting, welded, and seamless pipes and tubes. To give you a brief about this product line, I will hand over to Mr. Dhruv Patel, Whole-Time Director.
Good morning, everyone. To begin with the fittings business, fittings are essentially components in piping systems, which allows the connection, redirection, and control of fluids or gases within industrial environments. Our offerings will include various types of fittings, such as flanges, elbows, nipples, reducers, tees, etc. With only a limited number of competitors in this specialized sector, our decision to integrate fittings into our product offering elevates us to a unique position as a comprehensive PFF solution provider within the market. So we'll customize the fittings according to client specifications, which may involve modification in sizes, shape, material, or any other parameter required by the client. This expansion not only enriches our value proposition to customers, but also fortifies our competitive advantage, as we now offer a complete range of components necessary for robust piping solution. By aligning our offering with the diverse needs of our clientele, we position ourselves as the go-to source for comprehensive piping package. Furthermore, leveraging our existing loyal clientele, we will expedite approvals and foster deeper relations, propelling our growth trajectory. A key aspect of our strategy involves sourcing raw materials internally, utilizing wastages generated from our pipes business. This not only ensures cost saving, but also promotes sustainability by minimizing resource wastages. Further, additional RM will be procured from wastages of other players in the industry. The integration of fittings into our product portfolio addresses previous limitations in our offerings, ensuring that we can fulfill customer orders comprehensively. Previously, there may have been instances where we were unable to fulfill orders that required fittings along with pipes, as they were not part of our offerings. However, with this strategic expansion, we bridge any gaps in our product offering and can confidently address the diverse requirements of our clientele. This comprehensive approach strengthens our market position, enabling us to effectively cater to a wider range of customer needs and solidifying our reputation as a trusted and reliable partner in the industry. Overall, this move strengthens our position in the market by enabling us to effectively cater to a wider range of customer needs and requirements. Coming to the welded and seamless value-added products line, we are introducing a specialized product line of titanium welded tubes, along with stainless steel seamless and welded tube lines. These tubes are meticulously designed to endure the most demanding operating conditions while consistently delivering reliable performance. What sets these products apart is not only their exceptional quality, but also their exclusivity, as there are few manufacturers in the industry who are actually making these tubes. Their high precision design poses a formidable challenge for potential competitors, further solidifying our position as a leader in the market. An important aspect of this product like expansion is the inclusion of titanium grade of welded tubes alongside stainless steel variants. This strategic move enables us to cater to industries where hygiene and purity, such as food processing and pharmaceutical, are utmost important. Additionally, our offerings extend to sectors like nuclear and power, where the robustness and corrosion resistance of titanium grade tubes are essential. By offering tubes and pipes of such high quality, we provide our customers with confidence in the performance and longevity of their system, reinforcing our reputation as a trusted supplier of world-class piping solution. I now hand over to Mr. Arun Kothari, who will take you through the financial controls.
Thank you, Mr. Dhruv. So the capex will be executed in two phases. In phase 1, we are allocating approximately rupees 115 crores towards the development of fittings and welded tubes. We anticipate commencing operation for phase 1 by March 2025. This initial investment will lay the foundation for our expansion and set the stage for further growth opportunities. Moving forward to phase 2, we have earmarked a total outlay of rupees 60 crores, which will be directed towards fitting as well as welded and seamless pipes and tubes capacity expansion. The decision to prioritize either seamless or welded product in this phase will be based on the demand outlook and market dynamics. We anticipate the commencement of operation for phase 2 by December 2025, further solidifying our position in the industry. Venturing into these value-added product lines present a significant opportunity for the company to achieve a high return on capital employed. This initiative was strategically poised to enhance profitability and drive sustained financial growth. Regarding the profitability, we are confident that our return ratio will remain healthy and non-dilutive. Our overall margin are expected to exceed the mid-teens, aligning with our current performance. Additionally, we anticipate maintaining assets turnover at similar level to our current operations, ensuring efficient utilization of resources and maximizing returns. Coming to funding for the capex, approximately 40% of the required funding will be raised through the issuance of warrants with a significant portion allocated to promoters. This approach not only demonstrates our commitment to aligning interests with our stakeholders, but also ensures that active participation in our growth journey. The remaining 60% of the funding will be sourced through a combination of term loans from banks and internal accruals. By leveraging external financing in conjunction with our internal resources, we aim to optimize our capital structure while minimizing financial risk. This approach provides us the flexibility and stability needed to support our expansion plans and capitalize on growth opportunities in the market. We remain committed to maximizing the shareholder value while maintaining a strong financial foundation that supports our long-term success. As we embark on this exciting journey of our expansion and innovation, our commitment to driving sustainable growth and delivering exceptional value to all stakeholders remain unwavering. With a clear vision, strategic investment, and a dedicated team, we are poised to seize opportunities, overcome challenges, and achieve our growth objectives. By staying true to our core values of the integrity, excellence, and customer focus, we are confident in our ability to create lasting impact, foster meaningful partnerships, and drive success for our company, all those we serve. I now open the floor for Q&A.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Suman Kumar from Antique Stock Broking Limited. Please go ahead. Mr. Kumar, I have unmuted your line. Kindly proceed.
Good morning. Am I audible now?
Yes.
Yes. Thank you. Thank you for the opportunity. My first question is just regarding Arun sir, can you please just throw a little bit light on what would be the capacity? Like, this is the capex we understand, that about 170 crores. But a little bit on the capacity of the actual fittings. Like, I just want to get a sense what is the capacity utilization typically for this, because this is something new that we are doing. And also the second question is on the manufacturing front, like what is the exact process of how these are made? Like, we have all the raw materials which we said that we'll use as wastage. So am I to understand that this will be melted and casted into these shapes, or like what is the typical manufacturing process like?
Yeah, so basically if you see, if you see fitting business are primarily, if you see not from capacity perspective, I think it will be more from the revenue perspective of the investment what you put in. So we believe in the fitting business, out of this total capex, we intend to deploy around 60% of this total capex towards fitting. And we believe, as we said, the asset turns would be similar to what we are in the current business. So it seems to us typically more than 3.5x of the deployment of the fund. So that's how we generally better to see the fitting business, because there are a number of SKUs involved in the business. And from the side of our welded and seamless tubes, we have been saying that our intent is to grow at least 15 to 20% from the capacity perspective. So that intent we continue to foray into going forward also. And those capacity would be in the range bound of around 20% of our current capacity. And if you see from the perspective of, as you said, melting and all, basically, we will not be melting. There are a number of machines which will be required for manufacturing of these flanges, elbow joint, long band, nipple reducer. It can be paste mill, it can be bending machine, it can be beveling, it can be laser cutting, it can be handling, pickling, and induction bending machines. So primarily this type of machine would be required in the manufacturing of these fittings.
Okay, sir. Thank you. And just one more question, if I can add in. This is regarding the titanium welded tubes. Sir, where would be procuring the raw material? Like as I understand, titanium is quite costly and in terms of value chain. So can you just please throw a little bit of light on that?
Yeah, it would be imported basically.
Okay. Okay. Thank you.
Thank you. A reminder to all the participants that you may please press star and one to ask questions. The next question is from the line of Kunal Kothari from Venus Pipes. Please go ahead.
Hello. Thank you for the opportunity, and I am from Centrum Broking. So wanted to understand the application of these titanium tubes in pipes, like you have mentioned in the food processing and in other areas as well. But where exactly it is used, and anything about the market size right now, and what and which are the other players who are producing in India, and what could be the overall import mix which are meeting the current demand. Can you just broadly explain the market scenario about the capacity that we are getting in?
See, basically, titanium grade is not used for food processing in pharma. It will be primarily used by many of the government companies. You can say the sector like power and nuclear and others. So these are the predominant sector and procured by government and all. And see, there are very few manufacturers of the same in the country. But the requirements are there. there are many projects which come to us which include this as a small portion or not a very big portion, but the portions are there. So it sometimes deprives of us from those for qualifying for those projects and also. Definitely, with this addition of this product, we will be qualifying for many more projects. Our outreach to this additional sector and along with these few tenders and orders would be reached. And see, there are very, as we said, there are only really few manufacturers who does that. So it's a slightly high beta driven market, more value added products primarily.
Yes, I wanted to understand little deeper. Like right now, as you mentioned, very few producers are in India. So whom are they, and out of the overall demand, are we usually dependent on imports? And can you quantify the details, sir?
Giving the name of other manufacturers, it won't be, I think, would be right on our part. But see, it's being, you can say definitely it are imported and also being used by few of the selected manufacturers who manufacture this product. But as I said, their volumes are not too high. But again, the capacity what we are coming with, there are enormous demand for those capacity to an extent the capacity what we are coming in the market.
And how much we are looking to set up the capacity in such tubes?
As I said, the entry is at 20%, the total phase 1 and phase 2 would cater to 20% of our total capacity. Out of that, you can say 50 to 60% will come in this phase and balance will coming in the second phase.
Sir, I could not understand properly because our capex
50%
tubes altogether. So for the tubes, how much the capacity we are getting?
For that pipes and tube as a total, I am saying the capacity would be 20% of our total current capacity. And out of that, 60% of the capacity will come in first phase and balance 40% will come in second phase.
Okay, so out of 38,600 tons, around 20% will be in these tubes.
It's not tubes and pipes also.
Tubes and pipes. Okay, and so second question regarding stainless steel, seamless and welded pipes. So we have mentioned both, like even in seamless. So the existing product line of the seamless pipe we are increasing further, or it is also a new range of products?
Kunal, especially what will be our planning to do? जो titanium और special grade tubes है, that capacity will come in the first phase, as Kunal ji has told you. That capacity will be around 3,600 metric ton, which will be just approx, which will come in by end of this March 2025. For remaining, we are planning to further expand the capacity of the 3,600 metric ton by the December 2025. Which will be the mix of the welded with the existing capacity of the welded pipe and seamless pipe. So you can describe in this way, Kunalji. In the welded pipe.
Yeah, please continue, sir.
Yes, it's done, Kunalji. You got the point, na?
Yeah, I got it. Thank you, sir. Okay, that's all.
Thank you. Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, kindly limit your questions to 1 or 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Sneha Talreja from Nuvama. Please go ahead.
Hi, good morning, sir, and thanks a lot for the opportunity. Just a couple of questions from my end. Just wanted to understand what could be the sizable market opportunity, both in terms of titanium grade pipes and tubes that you are planning, and even fittings. Just to give you an example, what portion of fittings is used in pipes? Like, what's the pipe to fittings ratio? That's one. Who are the existing players, in case you can highlight, or what's the percentage of imports coming in the market for both the cables?
Yes, Sneha, good morning. Sneha, mostly first I will come on the fitting, in the fitting side. Fitting side, there is as we are earlier also told in the pipe industry, there is not much capacity and details are available from the industry or from the market research, because since very limited players are in the market. So in fitting side is also same position. There is a very limited player in the market. fitting business right now depends on the import as well as the small domestic unorganized player. Three to major players in the unorganized sector also. We can say कि 3 to 4 players are the major player. The name I will give in the one-to-one discussion anytime to you, or remaining are the very unorganized players. So since capacity is not available, but what we have observed from the all the industry experts and all the person who are the piping engineers or who are using the pipes in their industry, mostly the fitting is used along with the pipe, because pipes along single only pipe cannot be serve the any industry purpose, because the pipe length is limited. So pipes required to be joined with some places, pipes required to be sizes are to be reduced, reduced are used to use the different size of pipe, and pipe required to bend. All these are things happen through the fitting only. So what's our observation? Almost with the total pipe business, in if you, just I'm saying in tonnage, in tons only, almost in the all the pipes business. So 40% are the requirement of fitting. If the pipes is required, say for example 10,000 tons, so fitting requirement is almost 4,000 tons. It's a general phenomena in the all the industry.
Understood. So 40% is the fitting share.
Yeah.
Understood. Which is currently being catered either by import or smaller unorganized players or very few larger players that you are now planning. So customer set all would be the same for this particular fitting things, and margins would be slightly better off with similar answers.
Yes.
Understood. Sir, in case of titanium grade pipes and tubes, also in case you can highlight what would be the market size that we should look at? What's the percentage of imports that is currently being coming in the market?
Since they are same, the much data is not available, but right now we are expanding the titanium, not only titanium, we are expanding the capacity of titanium and the food hygienic tubes in the both the sides. So total capacity of the both the, we are procuring this type of machinery which can be used for the end of the hygienic tubes as well as for titanium tubes. So for both the including both, we are putting up the capacity of the 300 metric ton per month. So with the very good, right now there is a good market for hygienic tube as well as titanium tube. So titanium tube right now, very few players in India is manufacturing, which will be around, we can say, 100 to 150 metric ton only per month. Or remaining capacity of the titanium tube is imported from the Korea or Japan in other country. So whatever machinery we are putting the machinery can be used for titanium tubes as well as for the hygienic tubes. So there is a very good demand of the hygienic tubes. So we can say for hygienic tubes, demand in India is more than 1,000 metric tons per month, or only one or two players is manufacturing this type of tubes.
Understood. So that was really helpful. Thanks a lot, and all the very best, team.
Yes, thanks.
Thank you. The next question is from the line of Nirav Shah from GC Holdings. Please go ahead.
Yeah. Good morning, sir, and thanks for the opportunity, and congratulations on this announcement. A couple of questions, most have been answered. But firstly is generally what is the range of titanium content in a pipe, and typically if a welded pipe goes for 3.5 lakh, what is the corresponding titanium pipe? What level it goes at?
Neeraj, good morning. The titanium is a different standard compared to the stainless, and the grades are generally grade A, grade B, grade C like that. So it is categorized accordingly. So mostly for these applications, the grade B titanium tubes are used.
But the range will be like titanium content will be like 5 to 10%, or I mean, just wanted to get that.
Much more than that.
Much more than that. Okay.
Yes.
And these again are consumables like our existing profile. I mean, the replacement will be like 3, 4, 5 years, something like that.
It depends on the design and everything, but we have seen a consistent demand since last 3-4 years. We have been observing this product, and there is a consistent demand from the government agencies. So,
approximately of the 1,000 tons of hygienic and plus the titanium grade, what percentage will be the replacement cycle, replacement demand?
Sir, as per our knowledge, we are also not sure about stainless steel, what is the replacement cycle. So this is also not, we cannot forecast what is the replacement cycle, but it will be definitely replacement, and new demand will be always be there.
Got it, sir. Great. Thanks, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Asim from DAM Capital Advisors. Please go ahead.
Hi, good morning. So two questions. One, the two phases that you mentioned, can you just talk about the time period over which this capacity would be ramped up? Would it be usual 3 years' time, or would it be earlier, given the demand-supply scenario today?
Basically, as we said, see the first phase we intend to get away complete by tentatively by March 2025. So we believe the 50% or more than 50% should we would be able to utilize in the next financial year. And post that, we believe the substantial portion would be utilized. So it won't be very much longer period, but primarily you can see post expansion 2 year should be a period wherein the majority of the capacity should be able to utilize.
So roughly by FY27, a good portion of the capacity will be utilized.
Yes.
Okay. And second, I mean, you did talk about, you did say that margins are slightly better than the existing business, but can you just give some rough sense how different would that be for fittings and the value-added pipe segment versus the existing business?
So it's very, if you see, we have tried to give as much detail we can give in our slide. But just to mention, and we'll be mentioning that, again, fittings are largely led by many of the organized sectors and a bit of import also. So I think those rooms you can see those rooms will be available to us to penetrate in the market from the perspective of volume. And again, keeping a very, those players, the margin would be also far more lucrative. And again, see, whenever we supply pipe, let's say packaged type of product wherein pipe always requires fittings. So substantially, those things will definitely help us to get a higher margin as compared to what we earn in our current business. That I think can at this level I can say at this stage.
Okay. Okay. Thank you very much.
Thank you. We'll take the next question from the line of Sagarika Chetty from Anand Rathi. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Yeah, hi. Thank you so much for this opportunity. You mentioned that for the titanium pipes, you will be importing material. Can you specify from which area, specifically which countries? And that is my first question, if you can shed light on that. Any specific?
It would be basically from China and Japan.
Okay. Okay. And the second question is just a clarification. So you said that 50-60% will be completed by March 25, adding in 3,600 metric ton per month, correct? And the second would be in December 25. By December 25, adding another 3,600 metric ton per month, correct? Is that what I'm getting?
Yeah, near to these numbers.
Okay. Okay.
Apart from fitting.
Apart from fitting. Okay. Thank you so much. Thank you.
Thank you. We'll take the next question from the line of Maithili Balakrishnan from Alchemy. Please go ahead.
Hi. Hope I'm audible.
Yes,
Just to understand on the fitting side, are there also qualifications similar to what we see on the tubes? And, how long will it take for us to be sort of, get these qualifications and therefore get our capacity utilizable?
See, it's very similar what you said, as we go through the pipes, the similar qualification, similar inspections and things are done. But as we are already in this business of piping and all, it gives us a good room to get this qualification in a faster track. So we believe we will be able to ramp up this operation with getting the required desired qualification as and when we start this project.
Got it. And do we supply some fittings, procuring it from outside to our existing customers, or is this something that we don't do at all currently?
No. We actually we have been doing. We have been supplying fitting to our customers since long, but those portions are not very high. We have been receiving many orders from the customer wherein we were regretting those orders. But we've seen over the past there are a lot of demand of pipe along with fittings from our customers, and we were unable to sometimes qualify for those orders and all. So keeping all this under perspective, we decided to foray into fittings.
Got it. And currently you said that we do supply some, but that is outsourced from outside?
Yes, it is outsourced.
Okay. And what would be the quantum of that?
Not primarily, not much. You can say in the range
Not much.
amount of around 5%, something sort of that.
Okay. And this fittings, will it be largely made to order, or will you also be supplying to your trade partners?
Yeah, definitely. See, when we start with, as we have done in pipe, there would be mix. It will be direct order and also to traders and stockists because they cater a good amount of this market. But the endeavor will always be to get the required qualification at the required time and keep on penetrating more towards direct supply.
Got it. And in terms of the titanium pipes, you mentioned that largely the contracts which you're seeing are from government understand. Is this in defense, space, those kind of sectors, or could you just give us some sense of the sectors in which you're seeing the demand for titanium pipes?
Maybe nuclear, power, sort of that.
Okay, got it. Thanks. That's all from my side. Thank you very much.
Thank you. We'll take the next question from the line of Sahil Sangvi from Monarch Network Capital. Please go ahead.
Yeah. Hi, good morning. Am I audible?
Yes, sir. Please proceed. Yeah.
Yeah. First of all, very much congratulations for you know a second fundraise in a very short duration and the kind of you know the developments which have happened in the business. My question is around margins again. I think while you have given some details about the margins in the fittings you know product, but for the titanium pipes and tubes, both welded and seamless, how I mean the margins will be how much better than the normal tubes and pipes that we're doing, if you can quantify some numbers. And I would also want to understand what will this have an impact on our blended margins, I mean the overall consolidated margins.
See, again, we have given case would be definitely this titanium will be higher margin as compared to what we earn in our current business, and it will be basically titanium welded, basically. But again, quantifying a specific number will won't be very prudent for us to quantify at this stage. But as an investor, we go ahead, we will definitely give you more color on this. But again, as we said, the margin would be high because, as we said, there are only a few manufacturers in the country. Not everybody want to manufacture this type of complex type of grade of pipe. So I believe definitely this margin will be higher than what we earn in our current business.
Would you be able to give a range like 20 to 30% higher or anything like that?
Definitely higher, but again, I don't want to be specific on the range because those range can be also high, what you are thinking. But those range will come up later.
And do we see the blended margins of the consolidated margins of our the complete business going higher now because of these high value-added products now?
Yeah, definitely the intent is very clear to go into this value-added product wherein those blended margins on the side of both the product keep on increasing.
On optimum utilization, can we really cross 20% or that is very far-fetched?
I think again a specific number won't be very prudent to give at this stage, but again it will be a higher margin.
Sure. Thank you so much. All the best.
Thank you. The next question is from the line of Kunal Kothari from Centrum Broking. Please go ahead.
Yeah, thank you once again for the opportunity. So firstly, I want to understand on the overall capex, the fund allocation. So one is that the funds are coming by issuing warrants. And further, we are looking from debt and internal accruals. So as I see that from our records that we are having a negative operating cash flow. So going forward, how much you see that we can contribute from the internal accruals and how much we will be taking debt to fund the capex?
Yeah, basically, if you see out of this total project, we primarily intend roughly in the range of 40% from warrant and roughly in the range of 30% from term loan and roughly around 30% from internal accruals. So definitely FY25 would be a year where the margins of business and the top line would be far more better and increasing So I believe the internal accrual will be there, which can serve up to 30% requirement for this project.
So, are we looking that we will be operating cash flow positive from FY 25 and 26, and that will help to fund the CapEx?
Definitely, the intent is that only, and we believe we should able to achieve.
Okay, sir. So secondly, with my limited knowledge on titanium tubes, I think they are also being used in the aerospace and I think other defense areas as well. Does the grade and product profile is different than what we are looking to set up the capacity?
See, the predominant sector we have tried to highlight. There are few other uses. So definitely, we will be aiming other sector and other zone also, as and when we come up with it.
Okay, but the existing capacity provides us the flexibility to cater that areas as well, or do we need to take another capex for that specific requirement?
See, there may be some grades and other difference that we need to see going forward.
Okay, so thank you so much.
Thank you. The next question is from the line of Amit Kumar, an individual investor. Please go ahead.
Yeah, morning. Congratulations for entering a new business. So my question is when we can expect the revenue flowing into a P&L, and what would be the quantum? And the second would be what revenue carry we can expect in next 5 years, starting from FY 26 to FY 30 and 31.
See, what we believe one of the phase one we're targeting by March 2025. So as I said, it is around 50% of those utilization we are targeting for 25-26, and 26-27 should be a year where substantial portion of those utilization should be able to serve. And see, keeping all this, and second phase we are intending by December 25. So 26-27 would be the major 50 or 60% utilization for the second phase, and again 27-28 would be another year when maximum utilization from second phase should come. See, the intent is that it's to grow, and I believe keeping all these growth sector, if you see for coming 3 years, I believe at least top line wise, if you see 30% growth should be there, roughly range bound number going ahead.
Thank you. And what would be the expected CAGR revenue growth from new business starting from FY 26 to 31? Like in earlier calls, we guided for 30 to 40% growth for current business. So can we expect the same CAGR revenue growth, or it may be little less or more?
I mean, it will be in those range bound for the initial year, definitely.
Thank you very much for giving me the opportunity. Thank you, and all the best.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thanks to the participant for attending this conference in very short notice. If you have any further questions, so you can contact to our investor relation advisor, which is SGA. You can contact them anytime. Thanks a lot to everyone, and have a good day.
Thank you, members of the management. Ladies and gentlemen, on behalf of Ambit Capital, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.